Good morning, everybody. Early morning crypto talk. Bitcoin Brandon, we're going to get started very soon. You guys get ready for the week. Sunday. Good morning, Mr. Barry. Good morning, Michael. Mafuz, good morning. Thank you for that. I hope you guys learned something new from last night. From that crypto mindset. Good morning, Krista. Good morning, Shauna. I'm mad I missed out on you guys' barbecue yesterday. I had to settle for Wingstop. Good morning, Mr. Ross. Exciting times, exciting times. Good morning, Anthony. I want to ask everybody to keep one of our business partners in your prayers, Mr. Robert Wood and Faith Wood from London, England. Robert lost his father yesterday, so we definitely want to keep him in our thoughts and prayers. Always difficult time. That's right, Richard. I'm doing this right before I go to church. Good morning, Barry. So I won't keep you long at all. I'll just do a couple of articles and I'll do the rest for tonight, for late night crypto talk. But definitely, if you guys missed last night, cryptogenics mindset, how to launch your business as we go to pre-launch. And you've got the whole month to get prepared. You want to go back, it's on my page. I will make a video out of it later, but it's still on my page. And let's go ahead and get started. I'm going to start with the did I put this one down? Bitcoin is under-owned. Now, let's start with Arizona. Arizona to allow tax payments in Bitcoin. Now, I haven't read the article yet, but I'm not sure how I feel about that yet. You know, it's one thing for, I can go buy a Lamborghini with Bitcoin. I can go buy a Starbucks coffee or something like that. But when the IRS, the government is going to take payments in Bitcoin, that's a good sign, but I also question the motive. I've always been inquisitive like that. Yeah, that may sound good, but what's your real motive behind it? Is it to build a database? Somebody's paying you in Bitcoin, oh, this person's got Bitcoin. We got to keep them on the watch list. I'm a little worried about Big Brother knowing too much information, especially in these early stages. Well, let's see what the article has to say, and I'll put it in the chat box for you. And before I say anything, as a disclaimer, I am not a licensed financial advisor to be dispensing financial advice. I read the news, I share my opinion and suggestions, and you take that information and you do with it as you please. Do your own research. So the state of Arizona may soon allow people to pay state taxes using Bitcoin, the popular cryptocurrency. This news arrives after a few bills are up for consideration in the state's Congress. According to Jeff Winninger, an Arizona state representative, there are currently a number of bills on the floor of the Arizona Congress that deal with the issue of Bitcoin and other cryptocurrencies. One such bill has to do with the legal status of Bitcoin in the state, which means getting it recognized as a currency instead of a commodity. Now, I do like that. I would rather see Bitcoin and all cryptocurrencies being recognized as a currency rather than a commodity, meaning property. Another would give Arizona residents the opportunity to pay their taxes in Bitcoin if they so choose. See, the problem with this, because what state was that? Was that Wyoming that is recognizing Bitcoin as currency and not commodity? That's what they're allowing. Because if the state says, yeah, we're going to allow you to pay your taxes with Bitcoin, well, if the government is saying it's property, does the IRS allow you to pay your taxes with the house unless they're trying to repossess you? Saying you owe back taxes, so we're going to take all of your assets? You just can't walk up to the IRS and say, yeah, I'm going to pay my taxes with my house. It doesn't work that way. So that's why they need to change it and make sure it's being recognized as a currency instead of a commodity. Do you know how much we will save on taxes if that's the case? Here's a good example why. Donald Trump just passed an overhaul tax bill. In that bill, they changed one word or added one word to property, they added the word real in front of it. So Bitcoiners can no longer use that tax loophole of property anymore because they consider Bitcoin property but not real property, which means they're going to tax you just for holding Bitcoin. They're going to tax you for trading the Bitcoin. They're going to tax you for every single transaction because it's a property. They're going to tax you when it grows up in value if you're holding it into account. And then they're going to tax you a capital gains tax when you convert it into fiat, and they're going to tax you as earned income. You see all the ways you're getting taxed? But if it's considered just a currency, then you're just getting taxed on earned income tax. There's a difference. So I'm sure they want to keep it as a commodity, but we'll see how the law plays out. All right, opinions on the proposed plan have been split, with proponents and opponents arguing for and against the move. Jack Biltis, the president of TAG Employer Services, a payroll company situated in the Phoenix area, believes the move is a step in the right direction. Jack Biltis is a Bitcoin enthusiast, and his company even pays his employees via Bitcoin. Also, employees of the company are allowed to invest a portion of their 401k into Bitcoin and other cryptocurrencies. According to Biltis, the current framework of the banking and credit system is flawed and not efficient enough to support the digital age. With the rise of fintech, solutions that are more sophisticated are required to support the emerging digital environment. Steve Farley, the Arizona state minority leader, believes the bill puts an enormous burden on taxpayers, considering that the virtual currency is relatively untested and could crash at any time. Farley also went further to state that there is no need to introduce another tax payment vehicle when the US dollar is still in operation. He faulted the overall spirit of the initiative, condemning the role of special interest lobbyists in the American tax system. You know what? If the state government is against it, then I'm for it. I just answered my own question. If they don't like it, then I'm for it. Governments at various levels all across the globe appear to be developing means to integrate blockchain technology into administrative activities of governance. From identity management systems to document processing and even transmission of classified information, the innovation is powering the activities of government in many places around the world. If the proposed tax bill is passed into law, then citizens of Arizona could potentially start paying taxes via Bitcoin by the year 2020. This projection comes 3 years earlier than the earliest estimate by the World Economic Forum as to when governments would begin to collect taxes via a blockchain. All right, so that's 2 states down now. That looks like they're trying to be a little bit more positive to Bitcoin. Wyoming and Arizona. I think Texas still has a long way to go. Right. All right, let's talk about this one. And it's no shocking that it's coming out of Russia. You know, if you're going to travel overseas and you're in the crypto space, especially anywhere near Russia, you might want to have security with you. So let me put this link in the chat box. Russian blogger beaten and robbed after trumpeting Bitcoin wealth. Good morning to you, Shane. In a tragic turn of events, or could this have been predicted? I wonder if this is an old story. I mean, this just came out. I wonder if they're just now, because I reported on a story similar to this a couple weeks ago. In a tragic turn of events, a cryptocurrency blogger, who is widely seen as an enthusiastic and altruistic source of online information for the global community, was attacked in his home and robbed. The 24-year-old Pavel Niashin, well known as a prolific blogger within the cryptocurrency arena, paid an unexpected price for proclaiming his Bitcoin wealth online. That's another thing, guys. I know if you come from the MLM space, I mean, it is common for people to know how much you're making. It's a status symbol if you're having success in the space. If you're somebody that I want to sign up with, are you making money? I mean, isn't that the number one question when somebody approaches you about a business and then you ask, well, how much money are you made? Don't act like you haven't done it. Everybody does. Well, how much are you making in this thing? Is there any money to be made here? We don't ask that question in a 9-to-5 job scenario, but we do in the MLM space. And because marketers feel it is necessary to flaunt their wealth, their status as a means of recruiting. So, you know, they take pictures in front of their house and their cars and their vacations and flip-flop lifestyle and all that. And it's enticement, actually. But if you come to the crypto space with that mindset, you're putting a target on your back. I will never be talking about how much money I'm making specifically. In fact, don't even look at me. I don't have nothing. I just read the news. So let me finish this. Niashin lost what? Oh, not in US dollars. I'm about to say 24 million. He lost $411,660 when thugs attacked him in his Leningrad home. Although he had been blogging about his Bitcoin wealth in an unassuming manner, the information was not lost on the thieves. A group of men tracked him down to his house and struck him with a firearm before looting his possessions. Although Niashin had mentioned the house where he kept his wait, hold up. Why would you mention your house where he kept his takings? According to domestic site Forklog, the criminals clearly had to do some investigation in order to pinpoint and target him. That's right, Prevalus, I'm broke as a joke. Police are investigating a case of assault and robbery after the incident. Niashin has been hospitalized with minor injuries. He claims to be able to remember the face of at least one of the attackers, who was unmasked, while the others all appeared to be wearing New Year's masks. They struck him on the head with a pistol and tied up a neighbor in the building before making off with his safe, trading computer, and assorted documents. Seen as an aid by thousands in the Bitcoin era, Niashin produced YouTube videos in which he methodically explained how to trade Bitcoin on exchanges for everyone's benefit on his channel, CryptTech. Bizarrely, the thieves also vandalized all of the home appliances and other computers before making off in a Mercedes parked outside. He had received a phone call prior to the attack from an unknown person asking about cryptocurrency trading. The robbers could well have been confirming his home address via his phone number. Niashin had shown brief footage of his home in an online video. He said that while he suspected the caller could have been among the robbers, he couldn't be sure. Unfortunately, Niashin's foray into social media and subsequent misfortune is not the first of its kind involving virtual currencies. Close to home, an Exmo analyst and cryptocurrency investor, Pavel Lerner, was abducted by men with guns who had been waiting outside his office in Kiev. Lerner was eventually released December 29, 2017, after a $1 million ransom was paid in Bitcoin. Incidents involving ransom demands on the back of the tight anonymity of blockchain, secured cryptocurrencies are rising globally. The loot scooped up by the WannaCry ransom hack that occurred during 2017 is also slowly being moved via a Swiss exchange known as Shapeshift. See, that's the one thing about the crypto space. Even though it's anonymous, your addresses are public. So they know which address the money went to, and they're able to follow its course. So they know it's slowly being moved through the Swiss exchange Shapeshift. Interesting, the hackers are converting to Monero, widely heralded as the most private cryptocurrency available. So in other words, this is what they're doing. They take the crypto, they move it to multiple different accounts in small batches. They move it to different exchanges. They use it to purchase Monero. Then they move the Monero to different exchanges, and then they'll convert the Monero back to Bitcoin and then back to fiat. It's kind of like washing the money. If you understand money laundering, they're washing the money. Niashin has yet to ascertain whether the robbers have accessed his blog or his cryptocurrency wallet. It remains unclear whether documents taken by the robbers contain information that will enable them to access Niashin's Bitcoin store. Barry is absolutely right. I don't consider myself the top dog in cryptogenics. But I will be moving to a gated community behind 2 gates. Don't look at me, I have no money. If I travel, we're going to have security. All right, let's go on to the last article, then I got to get ready for church. And let's see, that is going to be about the worst enemy of a Bitcoin investor is themselves. I agree with that. Here is my prime directive before I get started. Number 1, education. Education. My partner, Jared Coleman, and I spent months, the whole summer, actually from May 2017 to August, researching this space before we spent a dime. You know, actually, we did. I got into mining during the summer of that, purchasing mining machines. But as far as investing in, I'm buying a bunch of Bitcoin and other programs. I didn't do any of that until middle August. Got educated first. So education is first. Second is never invest money you cannot afford to lose. Never put in money you cannot afford to lose. When you put money in, consider it gone. Meaning you shouldn't put your rent and mortgage and stuff in. And I know people do that. I don't advise doing it. Of course, you say, hey, scared money don't make any money. That might be true. And if you win, you might win very big. But I've always been a play it safe kind of guy. Always. I'm very careful on the risks I take. And when you do, number 3, return on investment. How fast can you get your money back? All your focus should be on, I need to make this money back so I can be back in the black again. When you do that, all risk is gone at this point. You made your initial money back. So now you're playing with house money at this point forward. I flipped $100 into everything I've got today. $100. And then the last part of that is put up a game plan financially. Where do you want to be in 3 months, 6 months, 9 months, based on the investments that you're doing right now? And how are you going to do it to make that happen? And stay focused. Do not get distracted. This space is so vast. There's so much going. A guy just approached me yesterday. He knows that we are about to launch Cryptogenics. He knows my position in the company. Yet still drop me, hey doc, you got to sign up with this. It's a pre-ICO. You got this and that. This is happening. You got to get in, man. And I'm like, seriously? Now, if I didn't have education, I might fear of loss, FOMO. Man, everybody's getting in on that. I don't want to be left behind. Yeah, let me go ahead and get a spot. Nope. I said, no, man, stop bringing this stuff to me. That doesn't mean your opportunity is not good, but you just can't be in everything. Do you think that Bill Gates is invested in every single stock on the stock exchange? Warren Buffett even less. Much less for Warren Buffett. That doesn't mean the companies he's not investing in are not good. You just got to stay disciplined. And if you follow that prime directive, yes, somewhere along the line, I guarantee you're going to lose somewhere, but you'll be in more profit than you will be in loss. There's no perfect 100% gains. You will lose somewhere. I just don't know when, where, how much, or what. But you will. I've lost in instances. I briefly got distracted in the whole ICO craze back in October and November. I got distracted. And I joined 6 ICOs. Only one of them panned out. Now, I didn't spend a whole lot of money. But the one that did pan out, I made more money than it cost me all of them. I made a lot of money off of that. So, I mean, the risk, I made out big on that, but I still lost. I just made more than I lost. So you just got to be educated and you'll be fine in this space. Be able to move, keep moving. Like Bruce Lee says, you got to be like the river, like water. And when an obstacle hits, when something goes sideways, when they're throwing rocks in the river, that doesn't stop the river. It doesn't dam it up. You are still able to move around it. You want to move like water. Most investors can't do that. One bad thing happens and they're out the game. Oh, let me read the article. I'm sharing my own information here. The worst enemy of a Bitcoin investor is themselves. Cryptocurrency have recently dominated the news, whether it is Bitcoin, Litecoin, Monero, or Ethereum, with astronomical value increases. Our attention has been captured and our thoughts amplified of whether we are missing out on the seemingly limitless profits from the surge in prices experienced in the crypto markets. Such hot topics circulate all over our social media, and not to mention the high likelihood of a friend or someone we know boasting about their crazy profits realized through their investment decisions with respect to cryptocurrencies. But how do you get away from all this noise and make a well-reasoned investment decision that is best suited for you? And that part is important. Best suited to you. Just because what somebody else's portfolio looks like and their plan that's good for them doesn't mean that's good for you. This is why you must have your own plan. You can't count somebody else's money. You can't count their investment. They've got a different game plan. Especially those of you and I'm going to see this happen in the cryptogenic space. Some of the people that's going to be making the most money will not be recruiting at all. They're just going to be doing it off of the product, the bot. Some of them may put 5, 10, 50 Bitcoins in the bot and be earning on that alone. We're going to have millionaires just from the product. And other people are going to say, well, man, of course they are. I mean, they put $100,000 in. I don't have $100,000. You can't count somebody else's. I was the same way at the beginning when I first started looking to invest in this space. I'm like, man, these cats, they're putting 20,000 in investment, 10,000, 50,000, 200,000. I don't have that. I was in a time of my life where I literally lost everything. I've made 7 figures, I've lost 7 figures. Where I was looking at having to get a freaking job. Almost did. I shared that story last year. So I only had, and some may laugh at it, I had $100. That's all I had to put in because I had to survive. $100. So I took advantage of the referral system program, my skills in building a team and a network. And the profit I made from that, I used that to invest with. So the little guy still can, no matter what you have, no matter where you're starting off with, you still can get all the way up to that. Barry, I know what you mean. How you start off January doing 2 to 4K a day. When people think I didn't lose anything, 2 to 4K a day. You guys understand what that is? That's 7 figures a year plus. To nothing overnight. To nothing. But I had a plan. And I was prepared. Here's another thing, guys. Do not quit your day job. If you're in crypto, I know how enticing it is. You're making all this money, and you thinking, oh man, I made like 20, 30 grand last month. I make 4,000 a month on my job. I'm out. Putting in my resignation letter. Do not leave your day job until you've got 1 to 2 years where all of your bills are covered if anything were to happen in savings. My old mentor used to say 6 to 12 months. I say 1 to 2 years before you decide to walk off your job. That's my advice on that. But when you lose income like that, yeah, you definitely lose your peace of mind. But I didn't lose mine only because I had a plan. We were already in the works with cryptogenics. And I already knew that I would be making more money in cryptogenics than I was before. But you have to have a plan, and then you need to have a backup plan to your backup plan to your backup plan. Let me get back to the article. So I'm going off tangent here. I know, taking a $200,000 a month to zero. But you know what else that also does for us? From the lesson that's being learned, we've been in a position to earn that type of money. We know what it takes to get there, and we will get there again faster than it took us the first time. And we'll double what we did the first time. That's one thing that I do know. That's why I had the crypto talk last night for the rest of you guys. How to launch your business. Because this is going to be the biggest launch of my career. The biggest launch of my career. We've got plenty of time to prepare. All right, so cutting through the noise. But how do you get away from all the noise and make a well-reasoned investment decision that is best suited to you. This article will explore the psychological factors that are involved in our rational or irrational decisions surrounding investments into cryptocurrencies. Behavioral economist Stephanie Bank from Every recently shared her insight about unintended biases that we unconsciously may be victims of in our everyday lives, and most interesting, in our investment decisions. The reports of a multitude of success stories covered in the media about those that have now become millionaires due to their fortunate investment decisions in Bitcoin and other cryptocurrencies over the years have been substantial. While success stories are amazing, it is important to note that there are fewer stories that cover the losses that have been experienced by many Bitcoin adopters simply due to the complexity of unlocking their wallets. Are you kidding me? Or remembering their seeds, trading the markets, damage to their computers, hacks, and so on. Again, this is why education is so important. You got people investing money and they don't even know how to unlock their freaking wallet. They don't even know how to pull their money out. They don't even know the amounts that they should pull out. I mean, there's a difference if you made $20,000 and you decide to pull all $20,000 out right now, or you decide to do maybe $3,000 to $4,000 a day for a week. Why would you do that? There's a difference. I'm not going to share why on here because this is public. A little birdie told me that trick. I'm just saying. If you don't have the education in the space, then of course you're going to take a loss, a big loss. But these people are taking losses because they can't unlock their wallet. They can't remember their seeds. They don't know how to trade on the market, but they do it anyway because they think it's the lottery. They damage their computers and never had a backup to it. Hacks and so on. Such positive stories surrounding Bitcoin do not falsify the theory of success, which leads to misconceptions known as confirmation bias, signaling amateurs to invest in any cryptocurrency with the belief that their expected return may be similar to that of Bitcoin. That's not true. However, I'll tell you this, in 2018, more millionaires are going to be created from the altcoins than from Bitcoin. There's one coin that's expected to do over 1,600% this year, while Bitcoin's expected to do close to 400%. I already shared that the other day. That's what I know. That's private knowledge. This is the year of the altcoins. You don't need to be a Bitcoin millionaire. So confirmation bias. The confirmation bias refers to the phenomenon of seeking selective information to support one's own opinions or to interpret the facts in a way that suits our own worldview. Isn't that the news today? I mean, don't people only watch news channels that fits their own belief? If you're a Republican and you love Donald Trump, you're going to listen to Fox News. If you're a Democrat or a liberal and you hate Donald Trump, you're going to listen to MSNBC. You know, isn't that what people do? Only listen to information that supports their current beliefs. Investors seek confirmation for their assumptions. They avoid critical opinions and reports, reading only those articles that put their point of view in a positive light. You know, someone even said to me, some of the businesses that I had invested money in that went belly up, or they left the country, or they had cease and desist orders put on them, and there were news articles about them. And I read the articles, I covered the story. And people are like, hey, Brandon, don't you got money in that? Why you covering stuff that's negative about? Because I'm not confirmation bias. You know, I'm not only looking for information and reporting on information that suits my own agenda. I want to know everything that's going on in this space because that allows me to make wise decisions in the future, and I learn from my mistakes. I'm not going to ignore something because I lost. No. It is in our nature to leverage support and search out evidence for the beliefs that we hold reaffirms our actions. And the occurrence of such behavior means, as a result, Our decisions are based without looking at alternative possibilities. You know, I did an article on Jamie Dimon, and somebody on YouTube blasted me saying, how dare I report on this clown and give him credence, and I'm hurting the crypto movement by reporting on him. I should be ashamed of myself as a fellow crypto enthusiast. No, we don't put our heads in the sand. See, I'm the complete opposite. I want to know what the other side thinks. I want to put myself in their shoes. I want to see how they view the world. That way, I have more knowledge. I want to be able to debate their point of view better than them. Transparency, as Shane says. A fascinating experiment conducted in 2009 at Ohio State University briefly asked their participants about their interest in politics and opinions on particular issues before they browsed online forums with articles supporting opposing views on the issues. The findings showed participants spent 36% more time reading articles that supported their views. It is no wonder that cryptocurrency investors gravitate toward information about astronomical returns on investment to validate their decisions, while simultaneously ignoring information about dramatic price fluctuations, potential criminal element, and vulnerability to theft, including the reasons many retailers and financial institutions are averse to adopting to cryptocurrencies. Stephanie Bank, as a behavioral economist, simply explains that it is your personal decision whether you decide whether you should or should not invest into cryptocurrencies, and provides the background knowledge into the mental processes that influences our behaviors surrounding financial technologies such as cryptocurrencies. Additionally, the public perception of Bitcoin has seen a dramatic shift from being viewed as an untraceable currency used by criminals on the dark net to becoming a solution to a multitude of economic and social problems and creating business opportunities. How can we forget to mention Bitcoin has been in the spotlight for creating millionaires in a matter of months? There's no getting away from all the noise, even if you are not very technical or financial by nature. Bank highlights the cryptocurrency's prevalence is chiefly linked to human psychology and less in relation to intelligence, risk tolerance, or experience. I agree with that. Since psychology explains why we as humans behave in the way that we do, given a particular situation, on the way in which we process certain information. The question is, are you following the herd? You know, the herd mentality. Are you following the herd? And yay, Lena, you made it to me doing one that's live. Bank predicts that due to our behavior being so profoundly influenced by psychology, our dinner party conversations is likely to consist of the following predictable pattern. All the smart players are getting into cryptocurrency. One of the primary reasons everyone is investing in cryptocurrency is because, well, everyone is investing in cryptocurrency. I would agree to that, and here's why. Just look at the stats. A little over 50% of all Americans have been exposed to Bitcoin and crypto. Only 5% of Americans own any crypto. And 0.5% of that even know what it is. See, the 5% that own it is because they've got money, they know that some people are making money in this, and they invest in it without having any understanding of it. That's the most dangerous. Somebody that has a lot of money, no experience, no knowledge, and they want to drop 50K into something and then start asking questions later. So tell me, what's a wallet again? You put in 50 grand, you're asking me that? How do you think you were able to put 50 grand in? You used a wallet. Oh. But at the dinner table, it used to be, think about Thanksgiving and Christmas. You were home for Christmas and Thanksgiving. Family knows that you're involved in crypto. And you always got that one uncle that's like, man, you still playing with that Monopoly money? Man, don't get involved with that, man. I got a partner that lost all his money in that thing. Or you get the curious that start asking you 1,000,001 questions. I mean, even my own brother, this was last summer when I was sharing with him that I'm starting to study the crypto space. My brother heard of Bitcoin. And his two things he said. He said, what's the value of Bitcoin? It's not backed by anything. And I said, oh, like the US dollar is? He said, no, the US dollar is backed by gold at least. Now, understand, my brother is an educated. He's got a college degree. He's got a master's degree. And he owns his own business. Yet he made a statement, said that the dollar's backed by gold. I said, Devin, the dollar hasn't been backed by gold since 1971, before we were even born. He was like, oh. Then the next thing I said was, he said, you keep saying this crypto, what? I said, cryptocurrencies. He said, what is that, kryptonite? So try explaining to your family and loved ones what Bitcoin and crypto is all about. That's why we've got an education platform. We don't have time to answer 101 questions all day long. Send them to the system. It says, what are my thoughts on mining? I have very good thoughts on mining. There is no blockchain. There is no crypto without mining. Especially if you're doing it the decentralized way. Mining is what creates the blockchain. And the miners are rewarded for their time and effort and energy in cryptocurrency. That's the payment they receive. That's how Bitcoin is being generated. So when people ask me, Brandon, would you rather buy the golden egg or buy the golden goose that will produce more golden eggs? I'm going to buy the golden goose all day long. My only problem has been successfully locating the right mining company that I'd want to be a part of. We've kind of struck out on that. But long term, that is one of my investment portfolios, mining. Absolutely. That's just not my number one way right now. There's three main ways for you to make money in the crypto. Number one is buying and holding. That's your long-term strategy. That's not going to work for those of you that need to pay your rent next month. Because I don't buy Bitcoin, I earn Bitcoin. The second way is mining. You actually purchasing an asset that's going to mine you and bring you crypto coins every single month. That's also another long-term strategy. That's not going to pay your rent next month. Unless you're taking full advantage of if the system has a referral program attached to it, or you have so much money invested in the mining machines and operations that you're able to pull 5, 10, 15, 20,000 a month just from mining. And the third way is trading. Trading by yourself and allowing an auto trader to do it on your behalf. Which one do you think I choose? Because I'm not going to sit in front of a computer screen all day. I want the residual income of it, where I don't have to pay any attention to it and it's churning out for me every single day. That's what Cryptogenics is offering. Now that you can live on. That you can pay your bills. That is giving you money on a consistent basis. But at the same time, it takes money to make money in the trading world. The more money you have in the trading, the more money you're going to make. If you don't have a lot of money, you can work your way up, but that takes time. It's not get rich quick. It's not overnight. Those are the three main ways. And I'm sure there'll be more new ways that's going to pop up much later. But let me continue reading this about the human psychology. Here we should be mindful of cryptocurrency or blockchain influencers and look past what they say and focus on their intentions, their own confirmation biases, before taking their musings seriously. That's very true. Watch who you listen to. Take what they say with a grain of salt. Challenge their assumptions and worldviews internally before taking it as a definitive truth. That's true. Even me. Don't take what I say as gospel. When I read these articles, I don't read these articles as if they're 100% true. I'm always challenging the author. I can pick out sometimes when I know they're either misinformed or they're saying something that's not correct. And I call them out on it. We all have participated in herding at some point or another. It is usually something we do almost as if we are on autopilot. Since all around us everybody seems to be talking about cryptocurrency investments, it's bound to make us feel like this is the norm, and it is something that we should be doing, if not already. Extensive research conducted over the years by behavioral economists at the most prestigious institutions, including UCLA and Princeton, have recognized herding as a fundamental cause of the biggest financial bubbles experienced in history. During late 2017, Biriana Associates provided an analysis confirming cryptocurrency is predicted to be one of the largest financial bubbles in human history. Adding to that, the price-to-earnings ratio of Bitcoin amounted to 4 times that of dot-com stocks at their 90s, toward the end of 2017, as documented by Bloomberg. Okay, let me stop right there. Okay, here's where I have a disagreement. This is partially correct. The correct part is that the rise of Bitcoin almost to $20,000 at the end of the year was primarily due to the herd mentality of people seeing the rise of Bitcoin that went from $3,000 to $6,000 and $7,000, $8,000 in a month, and felt that they were missing out, and all started to buy in on the market, especially with news of the CBOE and the CME coming into place for futures contracts. Everybody wanted in on the game. They didn't understand what was going on. They started buying Bitcoin when it was worth $15,000 a coin, pushed it all the way up to $19,000, and had no clue that something that is natural, called a retraction or a market correction, was going to take place. Here's where I break from this article, calling it that a bubble is going to pop. It's not a bubble that popped. It was a market correction that was bound to happen. The same, if you're going to call crypto a bubble, then you might as well call the stock market a bubble. What happened last week? We had the single greatest single day loss in the Nasdaq's history, worse than 2008, worse than 1929, worse than 2000, worse than 1989. All of this happened. Yet the news and the media didn't even call it a crash. Didn't call it a flash crash. They didn't call it a bubble. You wiped out all of your gains over the past year in a matter of 30 minutes. Yet you want to call Bitcoin a bubble. The only way you lose in Bitcoin, even when the market collapsed or crashed or popped, as they would say, is if you sell your stock. But if you follow the news, Bloomberg, Fox Business News, when it was going up, 15,000, 16,000, 17,000. You know what they're all saying? Buy, 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 buy. And then when it started going down, it went down to 13,000, 12,000, 9,000. Sell, 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 sell. That's the opposite of what you should be doing. You always sell high and buy low. Sometimes by you observing an event, you can actually be the cause of the event. That's what, if you're a Trekkie, Star Wars the Prime Directive. We don't interfere with pre-warp technology civilizations because we can impact their culture. Science 101, that which you observe, you impact, whether intentionally or not. So we have to have critical thinking here. I challenge that statement by UCLA and Princeton. Who are you to challenge it? Hey, I've got a degree. I graduated from college. It is important to consider that herding does not simply occur because of the innate desire to be included into a group, but primarily driven by fear and regret. Two very powerful human emotions that influence our behavior. That's true. Fear and regret. Researchers from Stanford University identified from their study, when an asset is overpriced and predicted to burst, individuals commonly herd into the risky investments due to fear of diverging from the crowd and being in a situation of watching the price to continue to rise. An insightful result recovered by the researchers is that our greatest fear in investing isn't the risk of loss, but instead the risk that we will be worse off in comparison to everyone else. That's true. Keeping up with the Joneses. Therefore, we are more worried about being relatively poor than actually having little to no money. It is in our nature to identify patterns and produce predictions about future events. This, in turn, frequently results in an incorrect perception of structure in random sequences and expect that the patterns will continue. This is something we may do daily. For example, if your favorite Chelsea football player scores in the last few games you have watched, you start very quickly expecting that behavior to continue. A study conducted by Duke University revealed that people perceive patterns after a sequence repeats as little as 2 times, and thus influencing their expectations of upcoming events. That's true. If the price of Bitcoin has risen for several days and weeks in a row, we suggest this information as a trend and simply assume the price rises will persist into the future, and vice versa for when price falls over several days and weeks. All right, let me stop right there, because that's true. And this is why education is so important. You cannot make decisions based off of emotion. Oh, the price is rising. It's been rising for weeks. I got to get in on the game. No, when you're educated, you can look at the charts, look at the market, and you'll recognize the pattern of, yeah, this is about to come right back down. So whatever I got in there, let me start selling right now before the drop happens. Or let me move it to Tether so I can keep my value of my wealth while it drops, and then when it drops, move it back into Bitcoin. Now I have more Bitcoin than I had before, and I didn't lose any money. You know, there's tricks to the trade. You got to get emotions out of it. You got to be able to look at the market and make an educated, I don't even want to call it an educated guess, but informed decisions, not based on emotion. I fell into the emotions trap when I jumped into the ICOs. I was seeing people I know making $400,000, $700,000, $40,000 on ICOs, and I'm like, dang it, I want in on this. I don't want to miss out. I learned my lesson. So, in conclusion, the cynical investment process, including information procurement, stock picking and making, holding and selling investments, followed by making a new selection, is full of pitfalls. These can come at a high price to investors. As the famous investor Benjamin Graham liked to say, the worst enemy of the investor is most likely himself. But you know what that same investor would do? Point the finger and blame on everybody else. Man, my cousin told me to buy Bitcoin. I put it in when it was at $18,000. And then like the very next week it dropped to $12,000. And now it went down to $8,000. I lost all my money. I'm going to sell. They never look at themselves. They always want to point blame at somebody else's fault. Purchasing investments is a rapid-fire process, and the value of these investments can decline just as rapidly. To seriously consider investment in cryptocurrencies, the individual should be aware of their own psychology. I like that. I'm going to take a mental note of that. Take stock. How do you react to bad news? How do you react to good news? Ask yourself the question. You know, in my MLM days, I was always taught the emotional roller coaster. You know, you want to keep yourself on the even keel. Don't get too excited when things are good, and don't get too upset when things go bad. Remain on an even keel. No, how can it fool them and learn how to ignore emotional impulses? So that's it for today, guys. I gotta go to church. I covered more because we didn't do news last night on Crypto Talk, but I still have some other articles that I may go over tonight. Like one is Bitcoin is under-owned among institutional investors, and that is important because when they get in the game, they're going to buy it all up. So it's a status symbol that if you have Bitcoin right now, everybody should own at least one full Bitcoin. Right now, get that and stock it away somewhere. Put it aside. Forget you even have it. There's another article, researcher reveals correlation between Bitcoin and gold. So those are things that I will cover tonight. Also, trading tip, the wall disappearing premiums. Well, that's an interesting one. Disappearing premiums signal bearish midterm outlook. Huh. That's a break. People are saying midterm is going to be a bull market. So this article is talking about it might still be in a bear market for the next couple of months. So we'll cover those things tonight. So with that, thank you guys for joining us. Bitcoin Brandon out. Have a wonderful Sunday afternoon. Bye-bye.
Crypto Gen X.